All right, let's dive into this GSK Pharma earnings report. It looks like they've had a pretty good quarter. Where do you think we should start?
Well, I think a good starting point is always the company overview, right? What exactly does GlaxoSmithKline Pharmaceuticals Limited do? What's their bread and butter?
Okay, so from what I gather, they are a subsidiary of GSK PLC, which is a global healthcare company focused on uniting science, tech, and talent to, get ahead of disease together, according to their report.
Get ahead of disease together. Right. And in India, it seems their core activities revolve around general medicines, specialty portfolios, and vaccines, particularly pediatric and adult vaccines. Market wise, they seem to be focusing on strengthening their presence in India.
Exactly. The report mentions celebrating a century of trust in India. They even had a bell ringing ceremony at the BSC Mumbai to commemorate their 100th anniversary. Fancy.
100 years. That's incredible. I guess that says a lot about their market presence in India. Any strategic developments that we should note, like acquisitions, divestitures, or any restructuring?
Nothing specific mentioned in this report about big M&A activity, but it does highlight internal reorganization and digital transformation initiatives. It seems they're focusing on streamlining operations and enhancing their digital presence.
Streamlining and going digital, huh? That makes sense in today's market. Okay, let's move on to the financial performance. Remember, we need to look at both standalone and consolidated results.
Right, standalone versus consolidated. Let's start with the income statement analysis. For the quarter ended December 31st, 2024, their standalone revenue from operations was 946 crore rupees with a growth of 18%. PAT before exceptional items was 229 crore rupees, up 37%. How does that compare to the consolidated numbers?
Okay, looking at the consolidated results for the same quarter, the revenue from operations is 949.42 crore rupees. PAT attributable to owners of the group is 229.88 crore rupees. The numbers are pretty close actually. It looks like the standalone and consolidated figures are aligned. Any idea why?
Well, it probably means their subsidiary Bidil Soya Limited doesn't significantly skew the overall financial picture. It's good to know they are on a similar path.
Precisely. Now let's look at the 9-month period year on year ending December 2024. What are the revenue and PAT figures there?
For the 9 months, the standalone revenue is 2,757.41 crore rupees, a 10% increase. PAT before exceptional items is 655.42 crore rupees, which is a 31% jump. What about the consolidated numbers for this period?
The consolidated revenue for the 9 months is 2,774.84 crore rupees, and the PAT attributable to owners is 664.71 crore rupees. Again, quite similar. It seems GSK's standalone performance is a solid indicator of the group's overall performance.
Got it. Now, what about EBITDA? I know that's a key metric.
For the quarter, the standalone EBITDA is 290 crore rupees with a margin of 30.7%. For the 9 months, it's 839 crore rupees with a margin of 30.4%. EBITDA growth is at 33% and 30% respectively, which is quite impressive.
And on a consolidated basis?
Consolidated EBITDA for the quarter is 308.10 crore rupees, and for the 9 months, it's 896.62 crore rupees. So a bit higher than the standalone figures, but still very comparable.
So, what about any one time events or exceptional items that might have skewed these numbers?
Yes, they do mention exceptional items. For the 9 months ended December 31st, 2024, there is a credit of 469 lakhs rupees on account of profit from the sale of surplus residential properties.
Okay, got it. Any details on dividends?
Yes, a dividend of 229 lakhs rupees was paid during the quarter ended December 31st, 2024. This was a special interim dividend of 12 rupees per equity share, approved in late October.
Nice. So, shareholders got a little something extra. Let's see, moving on to the balance sheet review. Any immediate solvency or liquidity risks that jump out at you?
Without the actual balance sheet numbers in front of me, it's hard to say definitively, but the report does mention healthy cash flow and improved working capital conversion, so that's a good sign.
Okay, what about cash flow evaluation, operating, investing, and financing activities?
The report highlights healthy cash flow with 100% of profits converted into cash during the quarter. It also mentions improved working capital, which suggests efficient cash management.
Excellent. So cash flow seems solid enough to sustain those dividends. Now, I know that this is super important, so I'll ask directly. Disclaimer. We advise investors to check with certified experts before taking any investment decisions.
That's right. Never make decisions without doing your own research and consulting the experts.
Let's talk about key financial ratios: profitability, liquidity, debt. What are we seeing?
Well, the report gives us some hints. EBITDA margin improved significantly and PAT margin also stepped up. The SG&A ratio to sales decreased, pointing to cost efficiencies.
Okay, and how do these results stack up against previous periods? Are we seeing positive trends?
Absolutely. Revenue, EBITDA, and PAT all show solid growth compared to the previous year. The EBITDA margin, in particular, saw a significant improvement.
So, generally, a good direction, yeah?
Definitely a positive trend, especially with their focus on cost management and digital transformation.
What about their outlook and recommendations? What does the future hold for GSK Pharma?
Well, the company seems optimistic, focusing on delivering innovative healthcare solutions and strengthening their market presence. They're also banking on digital transformation and strategic initiatives to drive future growth.
Any specific catalysts or risks they mentioned?
The report doesn't go into detail on specific external risks, but it emphasizes the importance of driving consumer awareness and creating an adult vaccination ecosystem, especially for Shingrix.
Got it. So, in conclusion, what's your overall assessment of GSK Pharma's financial health and future prospects based on this report?
Well, based on the data, GSK Pharma seems to be in a pretty good spot. They've shown strong financial performance, especially in revenue and profit growth. The focus on digital transformation and strategic initiatives could drive further growth.
Yeah. And the dividend payouts are a nice bonus for investors. Don't forget the record date and payment date were connected to the dividend that the board approved in October.
Exactly. So overall, I'd say GSK Pharma is showing a favorable trajectory with solid financials and promising growth strategies.
Great. If you found this analysis helpful, please like, share, and subscribe to our channel for more insightful financial breakdowns.
Thanks for tuning in.